Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. I'm happy to be here. My name is Lars Fontin. We are talking about cycle analysis once a week. Monday, same place, same time. Yeah, today is a tough one. For the analysis I want to do with you, I want to look at the global stock markets, the US markets in specific. And I mean, if you're following this channel, I'm a little bit clueless since February, March, where the cycle analysis still has no real clear view, or at least is showing downward cycles. And the markets just seem to do what they want to do. And at least it's very hard for a cycle analyst, at least from digital signal processing, to get a real clue on that. So I'm just open. I have no clear view. I have no clear answer what's happening in the US stock markets based on cycle analysis. But I mean, that's why we are here. So let's share some ideas. Let's share some thoughts. I will analyze the S&P long-term, monthly, weekly, daily together with you. It's not scripted. It's not prepared for a special presentation. Let's do this just live together with latest market data. That's the purpose for today. If you expect a clear answer from this session, there will be no clear answer at the end of this video. So you now can decide to invest the time to learn something on cycle analysis and put your knowledge on the table to contribute. Or if you're just looking for simple answers, that's not the session today for you. I'm just trying to be honest in the opening. Okay, let's start what I did this time with a very, very long-term analysis using now monthly data. So I have uploaded monthly data for the S&P 500 on my own. And did run some cycle analysis. And this is the starting point I want to go into, or at least as a starting point for today. So as always, we should have an best possible view on the long-term behavior of our asset we are analyzing. So therefore, here you see we are going back into 1925. I don't think that's as important as that, but we have from a time-based period, a very long time period. If you just have a look at the points of data we are using here, it's just that we have 1,000 data points. I mean, for a monthly analysis, it's quite a long period we are covering here. So let's start with that view. At the bottom of the chart, you already see the results of the spectrum analysis for this specific monthly data. I think what pops up is this interesting cycle here with the length of 91 months. So we're talking about monthly cycles here. And then the second one maybe with 135. They are also picked based on the dominant cycle finder, which we're using as highlighted here. I mean, we have a kind of interesting very long-term cycle, which is just from the mathematical perspective. It's located with a given length of 288 months, in that area. But as I always try to explain, this is a very flat plateau here in that regards. So we can't count on, where's the painting? Seems not here. No, here it is. So that's what I mean by flat plateau. So plateau. Yeah. So we really don't know where the peak is located in that range. And that's said, you need to be careful from a mathematical point of view. It will show up as a peak in the spectrum, but you see here it could be somewhere between 250 and 320. So this is a very huge possible range of a monthly cycle. So therefore, we really need to be careful if we want to work with that cycle. And however, these cycle peaks in the spectrum are okay from what we would like to see. So these two cycles are the ones to at least give it a start. Okay, let's close that. So let's activate these two cycles. By the way, this is a logarithmic view, I think, what I've cross-check, if we have this long-term behavior. I mean, it's long scale. It's just from how the data is shown on the chart, from the data and analysis. It's the same data. It's just how it is visualized. And I mean, what's clearly jumps to your mind is then from a logarithmic view, it seems to be a very continuous uptrend, which we're seeing here. So the detrending is here very important, which is done anyhow in the background. So if this is detrended, you get a very flat line. Okay, but that said, let's now activate these two cycles, which have been identified, which gives us at least this composite plot here in the chart. And what's first then interesting for me that the major top we have anyhow talked since November, December 2021. So let's see, here back in that time, October, November, we really, I mean, I refer often to that analysis from the monthly cycles. I think it was a 180 weeks cycle we've seen here. So that this top is also confirmed by the very long-term cycles from the monthly cycle series here. So I still assume that the top we saw in December 2021 is a very important one in the markets. Just using the cycle analysis, it's confirmed on almost any cycle analysis. I did daily, weekly, monthly. Looking now at the projection of the monthly chart, monthly chart and monthly cycles is what we're seeing here. This composite shows, and even if we zoom in a longer time, so this is now showing us that we are on the early stages of a very long-term downward cycle. So looking at this long-term projection, I currently see no reasoning to switch from these downward projections we've seen on the shorter-term cycles or weekly and daily cycles now to argue that the longer upswing is continuing. I think since December last year, from this very, very long period, is more or less confirming that we are still in the change of characteristics, since end of 2021, and we have even not passed half of this cycle here in regards to timing. So we are in a very early stage where I would say at the midpoint of these cycles, it's always challenging what happens at midpoints, but we are even not at these midpoint points arriving yet. So that's the long-term, the very, very long-term picture. And I mean, you see it's the alignment between the major tops and bottoms here in the past is still interesting. Always keep in mind the cycles are a detrending analysis, so not taking into account the long-term upward sloping markets here. And if we have a trend change in major characteristics, this could become even more powerful to the downside, but we don't know yet. So, and even though in this chart here, so if we have changed here, this up leg, I mean, it's an very impressive upswing, which, as I said, cycles have not foreseen this kind of upswing here, which is in the markets now. But that's it. Long-term perspective, monthly perspective. Just for fun, we could activate now this long-term cycle here, but it gives no overall change in the expectation that from a cyclic perspective, it looks like we're heading into more downward pressure from the long-term cyclic analysis. Yeah, so even though I would be very careful with this cycle of a length of 288 months here. But and in regards to the timing alignment of the major top, it's also showing us that there is no change, and the next short-term downswing projection is expected into August 2026, or even without, it is November 2025. So the short-term projection in these long-term cycles does not give us a bullish outlook right now. Okay, so monthly cycles. I was thinking maybe the monthly cycles are still pointing upwards, but they're not. So I don't find any clue for currently what's happening in the markets based on current long-term monthly cycles. So let's switch now to the next shorter time period, which are weekly cycles, right? So let's open weekly data series. Here is the weekly S&P 500 using the standard configuration with using 850 bars, as we are interested in the current market action, not in historical averaging the cycles. So using this for our cycle analysis, this is the current upswing we're seeing here. What's popping up here is, and it's quite interesting, is the very dominant weekly cycle of 182 weeks. Yeah, this cycle was one of those cycles which was active at the top of 2021. And I showed the projections of the 182-week cycle here, I think for the last 1.5 years, which has been pointing since November 2021 for a major low this year. So this is why it makes the cycle so fascinating and interesting, because with picking the top, yeah, it was quite right on time. So now we are really at the question, when will this 182-week cycle bottom? That's really, yeah, you could phrase it, that's the $1 million question in cycle analysis from the weekly series. So let's start with this major cycle. And if you do this kind of analysis regularly, once a week, once a month, so I'm monitoring this cycle for over 1 year now, and now we are really approaching at this point in time when the projected bottoms somewhere should be. We don't know the exact date. So, but okay, you see it here. It's also selected by our dominant cycle finder. Let's now activate this cycle here. So that's it. So it's very, very stable. As said, this cycle has more or less not changed since November 2021. Now it's about the fine-tuning of the phasing and the arrival of the possible low. So let's zoom in here and let's discuss this chart and this cycle for some minutes. So let's zoom in a little bit, and let's start with some interesting points in time here. So during the full course of 2022, I was really convinced that we would see a downswing period in the year of 2022, which really played out. And then at the beginning of this year, depends a little bit how you count it, we saw this counter trend move to the upwards, which was, yeah, not by this cycle here. So this weekly cycle would suggest that we still continue to move downwards, but which was not followed by this move in the stock market. So and this is why I was very confused that this change in trend happened at least too early. If we count from this low here, counting it, yeah, it was in the September-October low in the S&P. This was much too early to count this as a valid timing low if we would have these projected arrivals somewhere in April and May. That's why I was not convinced that this is the major end of this down move. That's also the reason from a shorter term perspective I switched to a bullish daily cycle back in January, which have been projected to come to an end here in April. if you followed this analysis. So the upswing here was a daily correction from the cycle, but it should have ended in February, March, latest May, which did not happen. So that's what I said. After this upswing here, there should be a final downward move into this summer, which, I mean, we know did not happen. So cycle analysis was wrong. I'm not trying to find a different way here. It looks like this has been wrong. So, but we're still not finally sure. So I'm not sure if we have really passed this bottoming phase now and approaching now the upswing cycle of this weekly cycle. And as you know from the monthly cycle, which is then, we have then two contradicting cycles. So the monthly cycles still more pointing downwards, and now having the weekly cycle, this upswing. But yeah, from the price action compared to this weekly cycle, it does not look really well. So we are too much off in this side. And that's why I said it gives me a headache, and I have no clear guidance in this session. What we could do now, we need to bring in more and more data, to confirm or validate or invalidate this kind of analysis. One possible way to do this is also at the future line of demarcation. So this first technique, using the length of 182. So we adjust it to a length of 91, just half of this cycle length. Let's zoom into that view a little bit more. That's why I was also more or less convinced here at that point when we made this low in October 2022, we really crossed below this FLD line here, which at this point in time gave us a confirmation that this downward cycle is in action and is validated. So it's confirmed. The cross of the price below the FLD in September last year gave us an additional confirmation of this downward cycle. But you see what happened right afterwards. Price really changed direction and decided to go more or less in sync with the FLD. So I've not observed such a behavior rightly after crossing below, which in normal instances would be a confirmation of the downward swing, and now changed exactly to follow one-to-one the FLD. But on the other hand, has not really managed to cross above again. So a cross above this FLD would invalidate the downward cycle, which did not really happen or just happened now. So with the upward push from the last week, which is in the data here for today, we see now we have managed to cross from below above the FLD, which in that case would invalidate that this downward cycle is still in force. And I think that's a very important observation we have now on this weekly cycle. So I'm not able to make a real judgment or final conclusion out of that behavior. So it shows more or less how indifferent this analysis currently is. If that's the case, this would be now a confirmation that the downward swing of this cycle has ended or is invalidated, and that an upswing cycle from this cycle might have started. But again, it's in contradiction with the monthly cycle, and I would not count this as enough valid data or information to really make this conclusion here. At least I would not come to that conclusion. I mean, we could, let's for a second get out of the FLD. Let's add then the second cycle, which is also highlighted here by the dominant cycle finder, which is this long-term cycle with around 377 weeks. By the way, this is the same dominant long-term cycle, which was used some years ago in the same analysis. So let's build a composite out of these two cycles here. It does not really give a clearer picture. That's why I mentioned in the beginning of this session here. And what this shows here, there could well be another downswing leg on a daily time frame into August, so into late summer this year, which was the original projection anyhow. So we had a long-term, or we would have expected just one final downward swing in the markets, which just adding this into the mix, we could be on the left side, so not having arrived at the final downward leg. But as I said, this is now very, very hard to judge and make a final conclusion. Where are we here in that sense? So maybe that's also the reasoning why it's so complicated these days, I think since February, to really come to a final conclusion between price and technical analysis, because we are at an important point now in the markets and in the analysis where we have now the conflicting fight between different indicators, different technical analysis results coming not to a final or at least same conclusion here. But so the market will tell us at some point in time which is right. But that's the limits of cycle analysis. So what do I want to tell here? From the weekly analysis, we still see the same analysis, which we see since 2021 here. This summer will mark an important or interesting point in time, which we have been waiting for anyhow. The longer-term monthly cycles still project downwards. The weekly is, let's say, at a tipping point to invalidate the downswing cycle on a weekly and maybe indicate another upswing. But I would not come to that conclusion now. Maybe we need to wait for another 1 or 2 weeks to get this really confirmed on a weekly chart, or which would still be a valid scenario on the weekly, bringing the 2 cycles in with the composite, that if we see on the daily chart another downward leg into late summer, this would be in sync with the weekly and the monthly. So now let's go also to the daily chart on the S&P and see what the daily cycles tell us there. All right. Daily data. Let's load now daily data into the analyzer. Let's bring up the chart. I see your questions, by the way. I will come back to your questions at the end. Thanks for bringing them in, and just continue to bring in your questions. I will come back to that in a minute. I just want to complete the daily analysis here. So this is the daily data. I think I mentioned this also in previous videos. Just looking at the spectrum here, this is really now a complex spectrum plot, with lots of peaks, with different cycle length. Not easy really to pick the best or at least the right cycle ahead of time, as we have so many possible cycles in this data series, which could be used. At least in the shorter term area. So I think from that short term cycles from 30 up to 100 days, it's very, very hard to really pick the right cycle. I would assume we anyhow will just come to a conclusion after the fact, which very short term cycle is right here, or it's more or less guessing. But in the midterm, we have something here which I would qualify for a valid peak, and the reasoning for explaining that this is a valid peak is mainly due to the fact, and let's spend a minute to explain the reasoning, because to the left and to the right, there are no real peaks with the same height or amplitude of this cycle here. So that's quite different here. So you have a lot of peaks at a similar high here. But in this, we have a lot of freedom to the left, to the right, and the sharpness of how from the left it rises upwards and then goes downwards, close to the 0 labeling on the axis here, is a very good visual shape of a possible cycle which is really there in this data set, and it's separated, has a good view. So therefore, even though not the highest amplitude, but a very nice shape. And therefore, and by the way, maybe, oops, oh no, I need to be careful here. And by the way, this cycle length here, if you have analyzed these daily series also, you know that the length of 170 something days, in that case trading days, not calendar days, is a very common cycle which is seen on daily time series. So based on this historical knowledge and the current spectrum, I would count this as a valid cycle. In that case, it's also interesting. This is not peaked by the dominant cycle finder. What is interesting, if you have a look here, what has been picked by our dominant cycle finder as most dominant cycle is the length of 81. Yeah, and 81, I would assume, is then close to half of the cycle length of 170, what have I said? 179. So in that case, I would assume that it's picked here. It's an harmonic relation of this shorter term 81-day cycle, close correlation to the 179. So we could use then both. So the picked one from the dominant cycle finder, this gives us also an indication which cycle to pick from these shorter term cluster of possible cycles, 81, and the possible active cycle here from the daily. So let's just start with this view. Yeah, it's just the cycle with 170 something days. Yep, so that's the historical view of that cycle. Okay, and now looking here into the projection area. Yeah, which still at that point in time here, so May, and I think this is what I wanted to, or at least told you very often, that in April, May, yeah, which we would expect the daily cycle to top out. This is what I told you since March. I mean, I first highlighted it at that point in time when I more or less have expected this could be an early top of this short-term daily cycle. But latest here, this was the second point in time when I repeated here that this would be an expected top. So the extension of this cycle, even continuing, that price is continuing to the upside. But you see that the top, even now, even we have shifted to the right side, has rolled over here. Latest in May this year, this daily cycle shows us that we would expect downward momentum now into late summer. Yeah, this is what I often try to explain, that I'm still waiting for one final downward move on the daily series, which is still in alignment with the weekly and the monthly cycle. We now need to monitor the weekly closely if the weekly gets invalidated, as I've shown you by the FLD, or not, but then also this daily cycle would be invalidated. Let's now maybe at the 81 cycles here. I mean, that's interesting. It would explain that at least from the short-term 81-day cycle, so the harmonic related cycle to the 181, it seems like adding these two cycles or bringing these two cycles into the mix, it shows like that the top has been extended a little bit to the right. In that case, which shows us for today or the current point in time, now the final upswing leg has ended, or showed that this 80-day cycle still had a final daily cycle to conclude. If I switch it on and off, so this is off without the 81-day cycle. If I activate the 81-day cycle with the harmonic relation, you see that the top is more or less a little bit shifted into the future with And that's what I said. I think there's still a valid chance in the markets to see a final downswing leg. Yeah. And I can't rule this out right now based on the cyclic data. And I know that cycles are moving up, price is moving up and up and up since February, March, where I have told, or at least cycle analysis told us maybe to expect the downswing. But looking at the updated cycle analysis, and that's what I want to share here with you from monthly, weekly, daily, there's still the valid case to see a downward cycle from the daily. However, the weekly gets more and more interesting. As I try to show you, maybe we can see the invalidation of the weekly cycle now. But as said in the beginning, no final conclusion which we could use. For sure, you should now bring in additional technical indicators, which I also like. Yeah, and just adding this here to the mix. This is one of the favorite indicators, using cycles to fine-tune the cyclic smoothed RSI indicator, which is also still looking for a possible top in the markets here. So this period of an cyclic RSI is not a situation to recommend another upswing move in the markets. It's also what I said. I have no evidence from cycles and technical analysis to confirm to a bullish cyclic upward situation. Yeah. So the technical configuration here of the cyclic tuned RSI would also more indicate, let's be careful for a final downward movement leg into late summer, right? Yeah, that's it. That's what the current analysis tells us. So that's what I tried to make as a clear statement upfront in the beginning of this session, that there's no really clear picture. However, it's a stable picture. But since February, March, that's what I told you, cycles don't give us a clear path, at least not in the US equity markets. The markets might be different, but that's another story and another time we would need to analyze that. So I will now switch to your questions and feel free to add, and let's see what we have from US community. And I've not pre-read or selected anything. Let's just start at the top here. So Elliot, the S&P is challenging. Yeah, that's a big question, or who is now influencing what's happening in the price action. I mean, some counted to the AI hype, some counted to the Fed, so whatever. We don't know yet. We just can try to guess. But yes, it's challenging also from the cyclic perspective. And correct. I mean, we always should have a clear, not sure, but at least try to have a picture on the US equity markets. And then parallel look at crypto gold, which I agree with you. Even if it's the case for equities, which are challenging, what I told you we discussed, it might not be the same for each and every asset class. So it's not the same for crypto and gold. So now we need some time here also on these asset class, but I don't want it to hide the not really working analysis on the US equities here. So we are not here just to switch asset classes and hide if something is not working. And then I think that's even more important to discuss the cycle analysis, which might even not be working out as planned. And at least I don't want to hide it. And it's very interesting to see how it plays out. But I agree, I need to pay special attention also to crypto gold and other asset classes in one of the next weeks. When putting in the symbology for weekly instruments, examples, we tried replacing the me for weekly to monthly data set not found. Yeah, the symbology does not work for monthly data, so it's still not implemented, or it's just simply not implemented that you can pull up automatically monthly data. You need to bring in monthly data on your own. So I just exported the monthly chart from my charting application. It's just a click export there, and then did a manual upload into the cycle analyzer with another 2 mouse clicks. So that's the way how to do it. The simple answer, the symbology does only work for daily and weekly. Yeah, working with Yahoo data in our platform. On the monthly cycles, do you lean on using your RSI? I do not see using it on any of your charts. Yeah, I mean, I showed it on the daily. To be honest, I use the cyclic smoothed RSI more to fine-tune entry and exit timing configurations. You know that cycles give us a guide on timing. And then I add at the end price into the mix. And then it's the technical analysis on price to fine-tune if the timing has arrived in combination with price. And therefore, I'm using the smallest time frame I'm interested in. So I'm interested then when I made the decision, what's the next leg, upward or downward on the daily chart. The other ones are just confirming the characteristics of the markets. I'm not really using them for timing. And on the daily, you see it's clearly in this overbought, indicating a downswing. So therefore, I don't use then the longer term charts with that cyclic technical indicator. But it's just my approach. It does not to be right or the best approach. That's why I just activated the cyclic smoothed RSI on the last daily chart. I mean, you can do and should do on the monthly and weekly, just then depends a little bit on the way which data and indicators to use. I've seen a cycle of 60 years, 720 months on the S&P. And maybe the 300-month cycle is harmonic of it. Yeah, I mean, that's thanks for the comment. No, I've not tried it. But I agree the 360-month cycle is a harmonic relation to that cycle. So what have we revealed on the 360-month cycle? Let me go back to the monthly chart for a second. Okay, understood. Yeah, bringing your question into context, your comment could help now. That's, I think, what we talked about here. Yeah, so that in the spectrum, maybe you don't see it based on your question, in the spectrum, we have the huge flat plateau here of this cycle, which makes it hard to really derive the cycle length. And if you now argue you have a peak, possible peak based on your long-term analysis somewhere here, I think this is the 350 at this given point in time. This could be a valid argumentation to use this 360-month cycle on this chart here. However, there's not an easy way to pick it from this application, because the application right now would just allow us to pick the cycles here on top, which is 288, yeah, which is shown here. So I like your question, or I like your comment, which I would say would be a valid approach to spot the correct cycle lengths from this monthly spectrum. It's just not as easy just to pick it here from this scanner. So I would like to try it, but not possible here within this scanning routine. Thomas, I still owe you an answer on the cycle with the US elections. I think that's a very valid or very interesting topic anyhow. Maybe we need to pay more attention here also in our discussion on the US elections or the 4 years cycle related to that. But I need to get back to you, and thanks for raising it and sharing it. Maybe I'm thinking about dedicating some special time here in the weekly Cycles TV, but not forgetting, I will get back to that. Yeah, then I like this comment also. Did you try to add a channel to the FLD similar to the Bollinger Bands? This could eliminate fake signals, so breaking the FLD to the upside or the downside. And by the way, that's exactly what Peter Eliades is doing. He's also using the kind of channel of FLDs. I think he calls it the continuum with having a more channel-like style of the FLD instead of just one line. What I'm doing, if I have some more time with the FLD concept, which we might not have here in that session, let me show it to you. I'm more or less simulating this kind of line. Let me just get rid of the composite here. Let's just simulate one FLD by playing with the lengths. Yeah, as you see here, you can click the arrows, make it smaller and longer, and then I see if you monitor here when the break occurs. So that's more or less the manual approach to creating kind of bands and to see where it is. It would be better to also being able to plot a band. It's on the feature list to improve the application. So I would recommend try to do this manually if you have more time to use the FLD concept here. Yeah. Maybe just finally, that's more from a user perspective here, the question. Let me bring it in a second. I wanted to show this here, Jim. Yeah, the dominant cycle finder, two-way or one recommendation, please try that. I cannot finally conclude if that's the view to make it permanent. If you want to have the dominant cycles here permanent activated so that you don't need to reactivate it again and again, please try to activate it in your profile 1 or profile 2 settings, yeah, which can be configured here, P1, P2. You're doing it in the following way. Go to the configuration icon, and there you have these settings of profile 1 and profile 2, which allows you to save and store 2 predefined settings parameters. So in that case, for the, let me just check. So for the AI, you need to switch to the scanner, and then dominant peak finder, AI activated, make this activated, and then to save it in one of your profiles, you need to actively now click the set button, yeah, so that this is now stored in profile 1. Then you can switch, so profile 2 is off, profile 1 is activated. And if you have these profile settings, then it should be permanent. So if I switch to profile 2, you see now that the dominant cycle column is off, and if I get back to profile 1, it's directly activated again. So, and if you now start the cyclic application again, switch to a different symbol. Let's say in that case here, the daily data, I don't know, just loading it. It will automatically, no, I think, yeah, this was just wrong typing. For the Yahoo Finance, it should then automatically have the AI activated right from the start. So Jim, I think please try that. I know that in some browsers, these settings are not stored permanently. This might be related to some browser caching configuration, but that's the preferred way how to make this a permanent setting in your profile 1, profile 2. Important is click the set bottom in the configuration panel. Yeah. I see cycles around elections seem to be interesting. I agree. We should also have a focus on other asset classes like crypto and gold in one of the next sessions. So I will take this into account. I just wanted to be open, and as an analyst and scientific researcher, you always pay attention to your previous analysis, even if they are wrong. That's even also interesting to learn from. Then I see, yeah, I want to set up the continuum. If you have any ideas on FLD and make it a continuum channel, please drop me a note or put please some comments below that video. I will review your comments, and it's always the place where I get the inspiration and priorities for how to improve further. So then please make a recommendation there. I will read your comment, and this is on our feature list. Yeah, thanks for this active discussion and bringing in your comments. That's always what I like to see here in this session. So you are invited to join next week, Monday, same time, same place. And thanks for joining me today and having this active discussion. Have a safe week. See you next week.